Welcome to today's market report.
European stocks held steadily on Wednesday as investors favoured real estate and healthcare stocks over economically sensitive sectors on rising concerns over a spike in global COVID-19 cases. The Pan-European Stock 600 index inched down 0.02%, with automakers and miners falling the most. Sectors considered more stable during times of economic uncertainty, such as healthcare and real estate, rose, while travel and leisure stocks clawed back some losses from earlier this week. UK shares initially found some relief after data showed British inflation fell to the Bank of England's 2% target last month in an unexpectedly sharp slowdown. However, UK's blue chip FTSE 100 slipped 0.2% and the FTSE 250 mid-cap index inched up 0.3%. After opening nearly flat, the DAX and the CAC fell more than 0.2%. Inflation stepped off the accelerator in July, but this doesn't mean we are set for a gentle ride, according to Hargreaves Lansdown. The underlying pressure on prices, particularly from soaring petrol and second-hand car prices, means it's set to pick up speed again soon and may well hit 4% by the end of the year. A much stronger than expected earnings season and improving economic data in Europe pushed the benchmark stock 600 to its longest winning streak in over a decade last week. However, pandemic-related worries and uncertainty around central bank actions stalled those gains. Investors will keep an eye out for the US Federal Reserve's minutes from the July meeting later in the day for hints on when it will start tapering its massive asset purchasing program. Danish bureau Carlsberg rose 2.5% after it raised its full-year earnings outlook and said beer volumes in key markets, China and Russia, had risen to well above pre-pandemic levels. Swiss medical device maker Alcon jumped 9% after it lifted its full-year earnings forecast, while online pharmacy chain Zur Rose fell 6.6% after disappointing first-half results. The crude oil WTI was down 3.4% at $63.02 per barrel. Brent oil was down 2.9% at $66.25 per barrel. Gold futures was up 0.17% at $7,787.70 per ounce. On the FX front, the GBP-USD pair held steady in the neutral territory, just below mid-137s, and had a rather muted reaction to the UK inflation report. The pair seesawed between gains, minor losses through the early part of the trading action on Wednesday and consolidated the previous day's sharp fall to the lowest level since July 23rd. Signs of stability in the equity markets held investors from placing fresh bullish bets around the safe haven US dollar, which in turn extended some support to the cable pair. However, a combination of factors continued to acting as a headwind for the British pound and kept a lid on any meaningful upside for the major. The UK ONS released the latest UK consumer inflation figures, which showed that the headline CPI rose 2% year-on-year in July. This marked a notable declaration from the 2.5% recorded in June and also missed market expectations for a reading of 2.2%. This comes on the back of worries that job losses in the UK will rise after the furlough scheme ends in September, which in turn undermined the sterling. That said, the downside remains cushioned as the focus remains on the FOMC meeting minutes. The incoming US economic data, including Tuesday's weaker retail sales, indicated that the UK consumer has grown more cautious in response to the latest surge in COVID-19 cases. This might have forced investors to further scale back their expectations about an earlier policy tightening by the Fed. Hence, investors will closely scrutinize the minutes for clues about the likely timing of the Fed's tapering move. This, along with developments surrounding the coronavirus saga, will play a key role in influencing the near-term US dollar price dynamics and provide a fresh directional impetus to the GBP-USD pair. The euro-dollar pair has been tracking minor gains in the middle of the week. The pair hovers in a very narrow trade band. Euro-dollar is currently trading at 117.21, down 0.11% on the day. The US dollar gains on its safe haven appeal as investors remain fearful of the concerns of the rising coronavirus Delta variant and its impact on global growth recovery amid a mixed bag of economic data. The single currency is weighed down amid a general risk of mood. The EU industrial production fell 0.3% in June as compared to the market expectations of a 0.2% drop. Investors turn their attention to EU core inflation rates, US building permits data to take trade insight. The New Zealand dollar was up after the central bank handed it down its latest policy decision.
This is today's market news. Thanks for listening. We'll see you next time.